Good morning, everybody. It's a pleasure to be here once again. Happy New Week. My name is Heritage. Heritage is our markets analyst at HFM Nigeria. And as always, we check through the markets, figure out what the overall sentiment is, what the major focus for markets is. Um, Overall sentiment is big stories, major drivers. If all of this provide opportunities and then how we can take advantage of it. But please do remember that this is just a communication material. And nothing in this communication contains or should be considered as investment advice or an investment recommendation. Users acknowledge that investments in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning is a slight tilt positive, but mostly a tentative, push and pull environment in the market. And we're going to quickly delve into it right now. Um, so today, Monday, August 8th, 2022. Now the markets continues to focus on central banks rate hike parts, right? By how much central banks will hike rates, or what's the rate hike schedule really going forward? In the middle of high inflation, while also paying strong attention to economic data for signs of a slowdown. And this week won't be any different, right? This week, major events on the calendar will be US CPI, US inflation data that comes out on Wednesday, which basically gives the markets and even the Federal Reserve another clue on the rates part. Right, if inflation comes in hotter than expected, above 9%, above markets maximum expectation as well, that basically strengthens expectation for a faster rate hike, faster pace of hike, and that remains the supportive factor for the dollar, and then vice versa as well. On Friday, we had jobs data for the US, NFP data, and the numbers were a static, solid, almost across board, right? Heavy. I think it was just participation rate that was a bit lower, but generally it was higher across board. And then even NFP itself, we're chasing about 250,000 new jobs. We had about over 500K, new jobs. And then all of that was really a supportive factor for the dollar. It shows that the economy is doing well. We're not really in a recession, right? And as such, the Federal Reserve have enough room to really tighten even more to try and get inflation back under control. So basically, that was the narrative on there. And I said, it pushed the US dollar up across board as dovish bets were tamed. Now, going into today's session, because we have a major event middle of the week, which is clearly a major driver for market, will be a major point of focus for the Federal Reserve and even markets generally, right? We have that bit of, calm before the storm in market. Right now, sentiment is a bit tentative, a little bit of push and pull here and there. Although you're seeing that tilt positive, you look at equities mostly holding on to their post NFP gains, right? Recovery, because after NFP we had a massive knee-jerk reaction to the downside, recovered the bids, ups and downs, heavy chops, and also for today, most of them are a little bit higher. Commodities also started the day higher so far on the session. USA was up by 1.4%, but right now, over the last couple of minutes now, we've seen a bit of downside as well in these, commodities. Bond yields mostly lower to start the day, while measures of profitability are mostly mixed. So that basically gives us a whole, you know, push and pull environment that we have. Yes, we could say equities are holding on better, but then with commodities now going back from the upside that we're seeing with yields down, it doesn't really show that solid positive flow, right? It's more of a mixed, more of a messy environment. It's not really a surprise. The Monday, the calendar is extremely light. We have a key event on Wednesday that the Federal Reserve is majorly focused on, and even markets are focused on. So right now, it wouldn't be a surprise to also see that bit of messy push and pull across the board. Having said that, you cross over to the currency space. Well, that slight tilt positive is still evident. AUD leads the majors, for example. The card follows suit. We had positive Chinese data trade balance for China, earlier, which supports the AUD, for example, as a very major trading partner. Um, with China being a major trading partner for Australia. So there is that. The slight positive tilt and sentiment also provides support for AUD. And even when you see the gently higher, equities also another positive factor for the Australian dollar. On the other hand, Japanese yen lags amongst the major effects, sticking to the bottom of the majors. NZD is also pressured. Now, that's also one to also call our attention to. In this case, we also had data points for New Zealand earlier, where inflation expectations really dropped where markets are not really expecting, or the data point shows that the expectation for inflation has come down. So that means that, well, maybe the RBNZ has even more room to even slow down, be more patient in terms of their pace. So that be clearly slowed the NZD there as well. Now, that said, there is still that sense of a lackluster performance in markets, right? That's generally ahead of the key US CPI data and a light economic calendar for today's session, especially with the focus of the market and central banks being on the part hike, the rate hike part, as well as inflation data and even slowdown worries, right? So put that at the back of our mind. But so far, that positive tilt in sentiment really is evident as sentiment slightly improves. Now, crossover to looking at strength versus weakness, CAD versus JPY. Yes, pushing higher a bit, broken above last week's high, almost all through last week. I look at AUD JPY as well, up almost 1% as well as when I wrote this, above a key area 94.000. But looking ahead, it's a light economic calendar day with no major data points on schedule. And as such, we may see a continued push and pull in the markets as we await CPI to figure out which way next. Either we get a Fed's dovish pivot, which is a less likely outcome, or we get a continued intense battle against high inflation in terms of higher interest rates and more across major central banks, starting with the US Federal Reserve. Now, excuse me, now a quick look at, let's see, this, all right, this is even cleaned up. Now, equities today, generally, right, we're seeing that, upside push in today's session, right? Pushing higher in today's session, up just about 0.3, 0.4% in today's session. Well within yesterday's Friday's ranges, right? And this is what we're talking about. NFP, we had a massive push to the downside, but then we had a massive recovery, push, messy chops. And so far today, that recovery has held, and we've broken above even the overhead trend line coming from even 4th of August, tested, and we've broken above it as well. Now, if this continues higher, retest pushes higher, it should support the AUD even further. If oil prices recover and now push higher, it should support the card. But like I said before, CPI on Wednesday, we may get that push and pull continue to remain very dominant in the market. And it's a very similar story across the other, equity bounces, right? Even for the German DAX now, we're now seeing earlier push higher. Now we are seeing push down as well in the same breath. So we're saying that push and pull may continue, right, for the rest of this. So that's why I'm not really being, heavily confident in the kind of sentiment that we're seeing, so far in today's session as well. So put that at the back of my mind. Oil prices now, they were higher, not so long, by just small margins, but now we're back towards net little change, still well within Friday's ranges, right, and still not much to hold on. So now overall, we are still lower, right, on the back of stronger US dollar, on the back of, OPEC increased supply, oil supply last week when they had their meeting, OPEC plus rather, when they had their meeting last week. Overall, the commodity complex is still very much pressured. Slowdown in growth expectations, also one of the reasons why we're seeing oil prices even push lower as well. But so far today, just like Friday, we're still well within that range, and then nothing tangible to really work with on this particular front. All right, here we go. Right, right. So not much there to latch onto as well in the session. Now, quickly running through to the currency space, just a quick look through. Right now, AUD JPY, like we mentioned, yes, it's higher in today's session. It's pushed higher, continuing just like Friday, right? Up about 0.74 right now, right? And up generally over 1% for the month of August. Now, in this case, we've broken above, the high for last week, basically, which came in, I think it was on Thursday, broken above the high for last week. Last week started on the first, so clearly broken above the high as well. In line with the overall sentiment, it could keep being supported. But in terms of convictions behind this, there's really not much to hold on to on that particular front. So, but strength and weakness, you have AEDJ pushing higher. Just that there's not so much we could latch onto now. If yields, bond yields, particularly the US 10-year yield, pushes higher, continues to push higher and stronger, clearly that would be another supporting factor for this particular pair, going forward. So having said that, KJPY is another one to also look out for as well. Right, we broke above last week's high, but right now we haven't broken back below it, which also shows you that overall push and pull that we are having. Right, it's a messy one. in all, if you're looking at the overall market environment, yes, that's slight tilt, but there's nothing much to latch on to really on that front. And then overall, being a Monday, a light calendar, key events in the week, I mean, it's not really a surprise. And as such, when you have environments like this, it usually makes sense to be more patient, right, before looking to latch into anything new. Now, the UK the Bank of England has also pointed to, recession, expected, right, going into this year, later this year, right? Our GDP has also been pressured, right? After the Federal Reserve, after the NFP data coming out solid as well, we had GBP fall, heavily, retraced a bit, and now we're seeing a little bit of push to the downside. Now, one thing I want to just call our attention to is this level is another interesting level. If you just let me see how I can, help out a bit with this, right? Right, let's just go back a bit. Now, this level is also an interesting level to look out for, right? This overall key 1.21 level. Just one thing to also call attention to. Now, if UK data keeps coming out negative, bad as well, I think there's still further room to downside for something like JPUSD. We've pulled back, quite a leg at the start of August, and now we've continued to the downside. Now, if the data for UK continues to be weaker, the US data continues to be even bit stronger, Federal Reserve continues to hike. I mean, we could be well on our way to retest the lows for the year 2022, as well as even the lowest points going back as far back as 2020 when the pandemic struck. So clearly there's also that you also want to also, put at the back of our minds as well. On the UK side, we've not sorted ourselves politically. There's still stress in terms of higher, inflation. We're talking about over 13%, right? Spurred by energy prices going up as well. So there's that to also look out for. But it's one on my radar and something I'm just keeping a very, very close eye on. On the calendar today, it's a light one. Basically nothing on the calendar today, in terms of data points. So clearly a slight slow day, maybe one in the day ahead, push and pull, very, very possible in the day ahead. Tentative flows, mixed, tepid, unsure environments, maybe one in the day ahead. And as such, as traders, we want to also be more patient and more cautious, right, heading into days like the CPI will be the major event for the calendar, even though inflation is expected to come in even higher on the corporates. So there's that to look out for as well. But generally, slower inflation data points are expected. So let's see how that plays out. Until then, we may continue to see the push and pull, and I expect that we are more and more patient in flows as we see it go on in the market. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask. I would always do our best to help. Thank you and do enjoy the rest of the trading session. Bye for now.